webinar. Interesting, statistics. You see that the daily payment that we do in a day-to-day basis is only 1% in our country is happening over this digital methodology. You can say the mobile financial services and something like the digital financial services. And in the global average is 16%, which is basically in the developed countries, which is 60% or even more than that. So that is also an inquiry to really check back why this interoperability is, necessity for having a greater impact. So in my next few slides, I'll be always discussing two things mostly. This is financial inclusion and the interoperability. Let's see what is financial inclusion means. You see, this is, it's a different components that actually contribute to the financial inclusion. As you can see, savings, payments, insurance, pensions, local money transfer, and of course the remittances. So delivery of financial service at affordable cost to sections of the disadvantaged people, I mean low income segments of the society basically. That is what is the financial inclusion, because the richest fellows or the rich people are already included. So we are always discussing about the underprivileged people of the society. On the contrary, interoperability, this is nothing to say much about it. It's the mobile financial service that operators have the ability to interoperate with similar services. So if you take an example like the bKash and Rocket of Dutch Bangla Bank, so if they can actually interoperate between them, if they can complete a cash in or cash out across the platform, then we can always call them an interoperable, which is not is the case here in our country. So this is the strictest sense of the term. Our interoperability of MFS enables users of a network to interact with users of another mobile network. So mobile money network. And then it fosters in particular inter-network money transfer like payment, cash in, cash out, etc. across the mobile financial services providers. Now let's see what are the facts that dictating opportunities. You see, over the recent years, Bangladesh has been experiencing a strong economic growth, which is almost around 7% and plus GDP, with an economy of 250 billion US dollar. So you can just imagine the enormous size and the volume of the economy of our country. And then you also know that country is experiencing massive digital transformation since last 2 decades, where we are also claiming that fostering of digital Bangladesh, where digital transactions are becoming increasingly popular. As such, mobile financial service account holders are also increasing in numbers. And this huge population and increasing economic growth of Bangladesh leaves sustainable promise for MFS business. Market is still experimenting. As you know that we just started back in 2011-12. We are going through different transformation in the MFS regulations, MFS industry, and all these things. So this virtually, the experimentation or the experimenting market leaving immense untapped potentials for opportunities. Now let's see what are the lacunas, what contributing the challenges for such interoperability to be achieved in our country. First of all, I will say that regulation is little weak to implement, lack of supervision by concerned authorities to enable market growth and the financial inclusion, intention of the dominating operators, the operators, those who are having bigger market share, they actually don't want to go for interoperability, and lack of compelling attitude by the relatively low subscription operations. Those who are having lower subscription, lower subscriber in their network. So they are probably having lack of, the force or power to actually implement the interoperability. And last but not the least, lack of appropriate platform or initiative to build such system or platform by the central bank. So the central bank, which should be facilitating this kind of platform, I'm sure that we are hearing since a couple of years that they are having an initiative, but we are yet to see such platform to be exposed, and or this kind of platform is operating in this country. So this is very quick, the preface of today's presentation. And the objective of the presentation is to discuss opportunities of interoperability and the challenges of attaining a perfect interoperable environment in the event of greater sustainable financial inclusion. I'll be discussing the mobile financial services in Bangladesh very short, existing arrangements of MFS infrastructure model, well, that is also known to all, and then I just touch upon suggested model that will be facilitating the MFS infrastructures and interoperability and the aggregator model a little bit. So very quickly, mobile financial services. In fact, Bangladesh Bank issued the guideline back in 2011, and since 2011-12, we started our journey. Basically, we do cash in, cash out, P2B, B2P, G2P, I mean P2G, P2P, this kind of, the transactions mostly. And then if you just look at till date, in fact, the last statistics that is being published by central bank, we have 80.9 million registered account holder. You can imagine what is the volume. But right on the next, the circle, you can see the frustrating statistics. That is, out of those 80.9, only 33.2 million are active. So you see, around 50 million account holders are inactive. So they are not using these services. So we need to really check. We need to really go back to the table and to find out why these 50 million account holders having a formal account with any of the MFS providers, but not using the service till date. So this is, we have to actually see. And to my understanding, interoperability is one of the reasons for which many of them are not using the accounts. So present MFS infrastructure is very, very simple here. So any of the MFS user can actually transfer money, do the cash in or cash out within the MFS provider. I mean, a bKash subscriber can only have transactions with another bKash subscriber. They cannot do a transaction or cash in or cash out to a Rocket subscriber, or for that matter, UCash subscriber or somebody else. So that is what is the present MFS infrastructure here in this country. The bKash technology platform, or the Rocket technology platform, is connected to different MNOs, I mean 4 MNOs, and then all the subscriber underneath the MNOs can be having an account with that particular MFS provider. So this is a simple infrastructure that we are having, but then the simple infrastructure is not paying, attaining the greater financial inclusion, or for that matter, we are really lagging to achieve or attain a sustainable promotion of the industry. So what are the models of interoperability we have in our hand? So it's also quite known to all of you. I mean, it's a GSMA study. We can have bilateral.
Zulfikar bhai, can you hear me?
Yeah, sure.
Okay, before going to the next model part, so we have some questions asked by some participant. Would you like to have some ray on that? So first of all, the first question is asked by the Mr. Raihan Hussain. So the question is that, does M-Pesa, the largest MFS service provider in the world from Kenya, support MFS interoperability?
Well,
that's the one.
Well, can I just answer, or let me have
Yes,
some
yes,
more
please.
questions? Okay,
Okay, it's
so
up to you.
M-Pesa of Kenya, I don't think whether they are supporting interoperability or not, because they are the highest stakeholder in the industry back in Kenya. So I don't know whether there are any other MFS providers existing there or not. But then M-Pesa, or like because I can show you another slide which is not in the arrangement of my present slide, where the M-Pesa and Bikash and this kind of giant operators, those who are having dominant market share, I should say dominant market share, like maybe 65, 70, 80% of the market share of the existing industry, will never support interoperability for obvious reason. I am sure that all of us know why the dominant players don't want to actually have the interoperability, because uh, well, that is the thing that will come in the later part of my the discussion. Maybe in the separate question and answer, I will be able to tell something about it. So Nasim, do you have any other?
So I have just one question. It's mainly on the inactive MFS user. So inactive MFS user, what is up what is up with so many interactive MFS user? It's basically on the if I can understand the question correctly of the Mansif Khan. So you want to ask, so why there are so many inactive MFS user among the active base? So it's not directly linked with the interoperability, but that's the basic question that you want, or you want to know.
Well,
So
Nasim, I got the point. I got the point. You see, those are the statistics being published just last month by the central bank. So 80.9 million registered account, and then out of that, around 47 point some million. I mean, around 50 million. You can call it like this. Around 50 million people are not using the service, so they are not active. So as I said, that interoperability may be one of the reason actually to not using the like I can cite an example, like maybe I have opened a Bikash account maybe for any reason, but then once I go to pay my children's tuition fee, the tuition fees probably are taken by the Rocket accounts or maybe somebody else. So I have only opened a Bikash account, but I am not using it. So if there would have been an interoperable environment, so through Bikash account, I would have put money or put the tuition fee of Rocket account of that particular institution of my children's tuition fee. So this is, to my understanding, maybe one of the reason interoperability to not encouraging many active account use. I mean, registered account user not to be active and having the services being used by them. So
okay,
should I continue?
yes, please.
Okay, so as I have been saying that the models of interoperability, this is a GSMA study that we can have bilateral agreements between the, the mobile financial services providers. We can have a neutral processor between the mobile financial the providers. We can have a commercial processor. It's basically, you see, the interoperability has got two, the segments of understanding. One is the agreement that we will be having interoperability that may be imposed by the regulator. Obviously, there has to be regulations by the regulator that the environment should be interoperable. And the other part is the technical or the technological arrangement. I'm sure that we have our two panelists. They will be discussing regarding the Tanzania case, and they are really working live on the issues with the technical and technological interfacing, how to make it interoperable between the providers or amongst the providers. So let us skip those. But then what actually I think that we have gone through almost substantial amount of time that we started 2011-12. We had been discussing regarding interoperability since 2014-15, as I can remember. Once I was in the Telecom Regulatory Commission as director, we had been discussing this thing with the regulator, I mean the banking regulator. We have a lot of, meetings, seminars, symposiums to, the foster this interoperability in the Bangladesh market. But for last 5 years, it has not been done. So there is no question that we should go for a bilateral now. We should think of a central one so that every and each financial services provider is interoperable with the rest of them. So it could have been a little before. People could have like Rocket and Bikash or maybe Mcash should have bilateral kind of agreements. But now the time is to have a central one so that everyone is interoperable with the other one. So it is basically nothing. It is simply a kind of things. I'm sure that you guys are having finance background and you are working with different financial institutions. You can always understand this is a solution platform. In the solution platform, there will be connections with the mobile network operators in the one side, and the other side, the mobile financial services operator. That will be clarified in the next slides. So this is all types of banking transaction. I mean mobile financial kind of transaction, cash in, cash out, some payment, like all these things can be done with this central platform. So any of the account holder can actually interact with the other account holder of the other network. So as you can see, this is a simple, the picture, I should say, a simple model that is basically, as you can see that Bikash, Touch Bangla Bank user are basically doing their transactions. These transactions are only happening within themselves, but still it is going through the central platform for different purposes that I will be discussing, like Bangladesh Bank, I mean the central bank, BTRC or the law enforcing agencies can have direct monitoring supervision over the transactions. So we have a clear picture at the end of the month. We have a clear reports that what is the transaction amount, how many transactions took place, actually where the density of the transaction, what the concentration of the transaction, what is the, the average of the transaction, and so on and so. And the other one, actually, this is a cross-platform transaction through payment gateway. So this is similar, but then only thing is that this is the transaction takes place across the, the mobile financial services provider. Like a Bikash account holder can actually send a payment to a Rocket account holder, or similarly, a Rocket account holder can pay or put some cash in, or they can do the cash out from the other network's account holder. So similarly, it will go through a kind of payment gateway. I'm sure that the payment gateway that can be again installed newly, or the payment gateway which we have in the central bank rightly, that can be also, we have a national payment switch. In that national payment switch also can be integrated with this kind of platform to have the interoperability. So interoperability would deliver, that the increased convenience as the mobile money sent across networks can be received and stored in a mobile wallet seamlessly, promote growth of MFS industry, ensure market competition, cost savings definitely by reduction in the transaction fees, unlimited choice for customers since they don't need to go favor MNO because of their network coverage. Benefit of spreading the network effect as the number of transactions in an operable environment increase. I said it because these dormant people will start working, using the service, and then thereby there will be a definite increase in the transactions. Reduction of barriers to entry, as been already told, that you see only 3-4 are dominant in the industry, rest of them are not really having you see a good, MFS business by the banks, some of the banks, and a few of the banks, though initially got the license, have already surrendered the license. So it is only 16 or 18, I think, working. But then 28 banks initially got back in 2011 and 12 the license to operate MFS, but failed to actually have an entry in the market. So, well, agents will enjoy increased income, so they will be more motivated actually for the expansion. And well, apprehension by addressing AML, CFT in an appropriate manner. As I've said that the every transactions will be oversight by the concerned authority to actually look into the issues, the AML CFT. The last slide from my side, this is Tanzania. I said that it's a role model of MFS interoperability. I had an opportunity to visit Tanzania back in 2017 or 16, I think. So that time we had heard a lot of things regarding the interoperability happening in Tanzania. I'm sure we have the other panelists to say more about this part, and which will rather encourage or enrich our knowledge regarding the interoperability. So concluding remarks from my side, you see the interoperability will definitely have an impact on the monitoring process to detect compliance and risk issues associated with the mobile financial transaction. The financial and operational environment consists of people, processes, and systems working together to support efficient and effective operations. The proposed models, I mean, is basically is not the proposed model. It is just a kind of skeleton understanding that I tried to give through those 2 or 3 slides. Will ensure the growth of mobile financial services along with the reduction of fraudulent activities. It will also provide a platform to monitor and to find any illegal transaction or suspicious activities through MFS. In the end, it would certainly help achieving financial inclusion in the country, as I understand. So with this, I don't know whether we have the open discussion right now, or we can hear the other panelists and we can have the discussion, if you have any, at the end of the other, panelists speaks, and then we can discuss. Nasim, back to you.
Uh, yeah, thank you, Zulfikar bhai. It's a nice and crispy one. So before going to the other panelists, I would like to request the innocent to take the preparation. During this period of time, there are some questions. I would like to request you to go to the participant log, and in the chat tab, you will find some questions. There is some question that need to answer is from the Ridwan Ansari. He's from the Circle FinTech. So, and there is a question from the Biranda from the Bangladesh Bank, and there is some discussion between them. So, Zulfikar bhai, can you look into it?
Sure, I'll check it up, and I will definitely try to answer all these,
Yes.
the queries.
And also there are some other 2 questions. So in the question answer round, so one question you will love to hear is switching among the mobile network, keeping the cell number unchanged, is facilitated by the BTRC at present in Bangladesh. Can this add an infrastructure backbone for interoperability? That's the one of the interesting and the fine questions by NAM Sarwar Akhtar.
Oh, that's really interesting. But then it's a very direct answer that, the number portability, it is just facilitating the mobile subscribers' right to choose the network. You see, we are talking about the interoperability of the MFS providers, I mean MFS operators. So I don't think there is a direct relation with that. But then, yes, fine. It might be if you open an account with a GP number, but then the GP network is not functioning in and around your office or in your house, then you can switch to some other operator like Robi or Banglalink or the Teletalk, which is better, giving you this network support in and around your home and or your office space. So you can switch. So that is how you don't have to, sometimes you feel that, okay, Grameen, I have opened an account with Grameen number, but is the Grameen network is not fine. So let me open another account with some other number, by Robi number. It is not required, but then you can just switch to the other operator, which is definitely of your preference. And then we still have the account valid for you. So that is how it can somehow benefit, but then we had been discussing actually the interoperability of the MFS operators. Thank you, Nasim.
So another questions for you is from the Birandada from the Bangladesh Bank. Since the interoperability allows participant to use the network of the member, so why do the market leaders such as Bikash come under the interoperability network? What are the benefit for a market leader in an interoperable market? That's the tricky one.
Yes, it's really tricky one, and that is from the the horse's mouth, from the regulators. So as I said probably in some phase of my discussion, that a dominant player will never support interoperability. They will try that everyone having an account of Bikash, so that they can operate between Bikash to Bikash. So that becomes an interoperability, if you want to say that 100% of Bangladeshi citizen that needs to use the mobile financial service, if they open an account with Bikash, then there is no question of having interoperability. So
Right.
case is not like that. The central bank has given number of licenses. As I've said, that it was 28 in the beginning, but I
Yeah.
think it has been reduced down less than 20 now. And out of that, 16 is somehow operating. Two of them are having greater market share, 80% by Bikash and 17% by Rocket. And the rest 3% is being shared by the other 14 service providers. So you understand, as a regulator, if there is an industry where you have number of licenses, so you have to enforce, or you have to install competition. You have to install a regulatory environment in a manner that all the licensees can operate with a profitable
Yeah.
case. Like, you see, back a decade back, the mobile network operator did not have the interoperability. The Grameen phone users only used to call the Grameen phone users. They could not call Robi or the then Warid or maybe Citycell or something like that. So BTRC did it very nicely, and that did not actually reduce the revenue of Grameen phone. Rather, it has increased multifold. But then at the same time, other operators also surviving in the industry, having kind of competition, kind of facilitation to the people to choose. People are now having a freedom to actually go for any mobile network subscription. So, if you consider the same issue in case of Bikash, Bikash might not be having an understanding to opt for interoperability, but I am certain and I am sure, if interoperability being installed in Bangladesh, or is there in Bangladesh, Bikash will be the highest, beneficiary, I should say. I may be wrong, but then this is what I actually believe. Thank you.
Okay, there is another question pending for you. It's from the Ridanul Ansari from the Circle FinTech. The question is that what can the regulator do to address the anti-competitive behavior that the market incumbent are practicing by not being interoperable? Why are we even tolerating anti-competitive behavior? I think somehow it's been addressed. Now, if you want to
No,
put some
Nasim,
light.
please allow me. I have a better
Yes,
answer for this.
exactly.
I have a
That's what
better
I'm
answer for
asking
this.
you.
Thank you for the question. I mean, you see, the regulator can always have, very strict regulations to enforce, the anti-competitive, or to address the anti-competitive, attitude by the, the market providers. I mean, the market. I don't know. You have actually Mint, Bikash, or Rocket, or something like that. So you see, Grameenphone, once we have a regulation in BTRC called Significant Market Power, SMP regulations.
SMP, yes.
So SMP can be also there for mobile financial services industry. Since 80% of the subscribers, I mean the active subscribers or the total registered subscribers are from one particular MFS providers. So central bank can always have a regulation that he can no more actually increase his subscriber, rather he should have a separate tariff, a separate charge, so that people are being discouraged and people should force to go to other operator to facilitate other operators to survive. So SMP, in very short, this is what actually SMP means. Actually, in everywhere in the world where in any industry, if someone becomes so dominant or trying to actually go to an apex situation, which will give them or provide them a monopolistic behavior, there that industry regulator can always impose SMP kind of regulations to actually allow others to actually equally survive. Thank you.
Julfikar bhai, if you allow me just to add on that part, India is currently practicing the same thing. So because there is a UPI, Unified Payment Infrastructure, so by them, because for the newcomer, they allow the maximum portion of the market share, and later on with year 2 and year 3, they put some restriction on that. For example, if you see now Paytm is out of that UPI network, and PhonePe is gaining more market share because now Paytm is been restricted with the 33% market share. It's already been implementing in India from the last year, and that's how they are monitoring and controlling the entire market. So that is similar to like our SMP here in the for the MNOs.
Right. Thank you. Thank you, Nasib.
So, are you there?
Hello?
Innocent?
Hi.
Hi. So
Yes.
I would like to request you to start your experience from the Tanzania market and how you guys made the Modus box and you guys are implementing this interoperability solution in the Central Bank of Tanzania.
Thank you very much. May I request Mohammed to let go of the screen so that I can share my presentation?
Okay. So, Julfikar bhai.
Thank you. Can you see my presentation? Hello? Can you see my presentation?
Yes, Innocent's clear.
Great, thank you very much. Well, my name is Innocent Ephraim. I work for Modus Box, based in Seattle, Washington, but I am based in South Africa. And today I'll tell you the story of interoperability from the view of Tanzania. Talking about the evolution of all this mobile money story and payment story, all the way to when Tanzania decided to build a real-time payment switch that interoperate every player in the market. So the Tanzania journey. The key things that I'll talk about is the financial sector in Tanzania, followed by the whole concept of test and learn approach that was spearheaded by Governor Ndulu, Professor Ndulu, who was the governor during the evolution of mobile money and digital finance. And then I'll talk a little bit about industry engagement, and then I'll give myself a moment of reflection. The financial sector, mainly driven by a number of industry players, but the financial sector deepening trust in Tanzania has led a lot of agenda around financial inclusion, and you'll see a lot of work done by them that I will highlight. First of all, the way financial inclusion is defined in Tanzania is by 4 quadrants. The first one being access, quality, usage, and welfare. When we talk about access, the way Tanzania measures that is for anybody who really wants to get financial services can actually have it by registering, meaning that it's close to them and it's affordable, and they are actually eligible to register and use. Mostly, we will look at that journey on how Tanzania shifted from one quadrant of financial inclusion to another. And at this particular point, they're driving more of the usage agenda. Mostly, the country has driven the financial inclusion strategy through the financial inclusion framework. The first one was developed in 2013, and the strategy was between 2014 and 2016. And in 2017, the second strategy or a revised strategy was done, and this strategy would actually be implemented between 2018 and 2022. If I give you a little bit of demography of the population, the rural population is 66%, while urban is 34%. The gender split, 51 female and 49 male. And this actually drives a lot of strategic pillars within the financial inclusion strategy when we talk about financial inclusion for women, and we talk about driving financial inclusion in mostly rural areas, because those are the most populated areas compared to the urban areas. The country is beautiful, and by the year 2017, Tanzania had achieved 65% of inclusion. In other words, 65% of the adult population in Tanzania who is willing to get financial services would get it, and they are able to use it. If you look at the change and movement of financial inclusion, a number of measures has been done through the FinScope survey. In 2016, the second FinScope survey was done in 2019, which you can see on your screen. And the measure there, we had 55% of exclusion. In other words, the only 9% who were banked population, 7% who was some sort of non-bank financial institution. This includes MFIs and SACCOs, but 29% was driven by mobile money. And then the rest was excluded, the 55% excluded. If you look at that trend all the way to 2017, you'd realize that the mobile money percentages has grown from 29% to 52%. In other words, the financial inclusion in Tanzania is driven by technology, by mobile money. And we can also see that the rate of exclusion has reduced to 28% in 2017. Let's talk a little bit about the test and learn approach and the role of coordination between private sector and the central bank. Now, Mohammed has spoken earlier. We've spoken a lot about what interoperability is all about, the challenges, the learnings, and all that. From the Tanzania perspective, I would strongly say that interoperability, financial inclusion is mostly driven by both the industry players, the regulators, the policymakers, and everyone in the economy. In other words, we need a coordinated approach to drive financial inclusion, and interoperability is one of those tools that will get us there. Now, taking you a little bit back to the mobile money one-on-one, for you to build a successful mobile money, or the way mobile money was built successfully, the telcos actually came in when there was no regulations around how mobile money should be done. So Tanzania was lucky enough to have a very open-minded regulator who did not say that we don't have a regulation, so we will not allow you in, but simply authorized the players through the letters of no objections. In other words, mobile money providers went to the regulator and said, this is what we want to do. And this is how we're going to offer the service. This is how we're going to take care of AML issues, register customers, and consumer protection. And after the regulator analyzed that, they say, cool, we understand what you're going to do. Go and do it and we'll monitor. And that was the whole essence of letters of no objection. On the mobile money side, there was a lot of stuff that they had to take care of. The supply of the product itself. Now, if you look at the picture on the far left, you would see little kiosks. We call them dukas in Tanzania. People were already trading in some stuff. They sell a loaf of bread, or they sell salt, or loaf of bread or sugar and stuff like that. They're exchanging value within this chain. They've got customers walking in and out. These guys have cash in these stores, and these were used to distribute the service of mobile money. It is very important to also note that in Tanzania, Kenya, and most of African markets, the major driver of the service, or the anchor product of mobile money, was money transfer. In other words, when they launched mobile money in Africa, they started by offering a service of sending money from one point to another. If you look at the demand side, you really need to make sure that you get the right anchor product, which in case of Tanzania, it was money transfer. And you need to make sure that you have a strong technology that will offer availability that is simple and flexible. In other words, if customers are not reacting well with the product or service you're offering, how quickly are you able to tweak and meet your customers' needs? In the very bottom, we're talking about establishment of regulatory framework, creating certainty and level playing field. Now, I've spoken about letters of no objections, but the regulators did not just end up there. You know, when you look at the regulation sphere in Tanzania, we have a couple of regulators before the telcos offered mobile money. You had the central bank, who traditionally is not regulating a telco. Then you've got a telecommunication regulator who actually regulates the telecom services, voice, data, and SMSs. Now, these regulators had to work together to say a telco who is regulated by the telecom regulator is offering a service that is supposed to be regulated by the central bank. And what happened in the case of Tanzania, there were like memorandum of understanding between the two regulators to say, yes, we understand what they're doing. We know the technology they're working on. As long as they abide with the banking, with the payment regulations, they can actually go ahead and offer the service. Now, the landscape, the story around how you offer mobile money is a long story, and we can talk all day about that. If I move forward to some of the important things to think about, once the mobile money had already been launched, we see a lot of partnership coming in place, integrations coming in place, cooperation coming in place. Now, if you think about the evolution of the product itself, as I said, they started with the money transfer, then they started integrating bill payment. In other words, you could actually pay your prepaid electricity bill through your mobile money wallet. And then they enabled mobile money to bank transfer. If you've got mobile money value in your wallet, you can actually transfer that money into your bank account, and vice versa. You've got money in your bank account, you can move it directly into your mobile money wallet and spend it. Now, these are the key points that I think are important to raise at this particular stage. Established foundation of customers, agents, businesses that is building the foundation of product itself, all the way to building a real-time payment across different providers. Now, once we had strong mobile money providers, and I think I need to stress this point, Tanzania is totally different from other markets, very different from Kenya, so to say, and I'm pretty much sure it's different from Bangladesh. But the peculiarity of Tanzania is we've got a lot of mobile money providers, 6 of them currently, and they all have fairly equal amount of market share. That brings about a lot of competition, great service to customers, and allows innovation to happen.
Innocent, can I ask you one small question on this part?
Yep.
You said that there are 6 equal amount of 6 MFS provider and they share the equal amount of market share. Is it driven by the regulator, or is by somehow it's driven by the product and the service offering by those respective MFS provider?
I would say both. So when mobile money was launched in Tanzania, we had 4 major operators, and from the telco point of view, they had fairly equal market share. Like, you know, you'd say the biggest telco operator was around about 38% market share, and the smallest had round about close to 20% market share. And then when they started offering mobile money, each one said, okay, my competition is offering this service, I also want to offer this service. But that is not the only reason. Remember, Tanzania was 1 year behind Kenya in terms of launch of M-Pesa. Fairly enough, both countries have the same product. But as Tanzania was following what is happening in Kenya, the regulator picked up a lot of learnings and made sure that we did not have stuff like exclusivity of agents. So in other words, if Vodacom has an agent in position A, they could not stop another operator to come in and sign that agent up to offer their services, of which in Kenya, it was very different. When Safaricom had registered an agent, Airtel would not go in and register the same agent for Airtel Money. Otherwise, they'll be shut down by Safaricom. So in Tanzania, that story was a bit different, and that particular one was driven by the regulations. So the regulator said there's no agent exclusivity. I hope I did answer your question.
Yes.
Perfect. Moving forward, looking at the interoperability story now, in 2013, 2014, the industry came together. So remember, interoperability was already happening. Interoperability between mobile money and banks, mobile money and MFIs, that was happening. The only equation that they did not have is the connectivity between MNOs, between mobile money operators. So moving money from M-Pesa to Airtel Money was not happening yet. So 2013, 2014, they started coming together to say, hey guys, how can we facilitate money movement from one operator to another? And hence they chose one use case they want to go with. They started with send money or peer-to-peer transfer. They created rules and regulations. They interconnected and started facilitating movement of money from one operator to another. Now, what that really means is if you've got a Vodacom wallet and you're sending money to someone who has got Airtel Money wallet, that money will go straight into the Airtel Money wallet. While before, when you send money to someone who is not on your network, that money will go, but it will go as a voucher. You cannot spend that money on any other transaction except cash it out. Now, within this period, they also wrote rules and regulations around how do they interoperate on merchant space. And as we all know, the competition within the telecom space is heavy. They had a lot of issues to raise on the table, and this was a collaborative effort. They came all together and spoke about these issues. It took probably more than 2 years to talk about it. But at the end of the day, they wrote a lot of rules around use cases in bulk payment, merchant payment, and agent-to-agent interoperability. As we speak, they only have person-to-person interoperability and some sort of merchant interoperability. Important tips to consider. I think as a market, Tanzania promoted interoperability from the regulator standpoint, talking about the importance of every market player to connect with another market player. And interoperability use cases actually drove usage. Instead of people getting money into their phones and withdrawing it, they started spending money on their account. So if you look at the transaction numbers after interoperability came in, you'd see a kind of peak of transaction volumes and values. That increased efficiency because mostly if a merchant had 4 different tills in the store and requested customers to pay on their network, right now they would say, just pay me on this till number. Now, a typical picture, just to give you a little bit of a view, a typical picture of a merchant or an agent in Tanzania, you walk into that agent and they've got 6 different till numbers that you need to pay into. Now, you're lucky enough if you did read the right number of the network you're paying to. If you got that number wrong, probably that money will go to a different agent because this merchant or this agent has got multiple tails in their store. So interoperability reduced that chaos and increased transaction volumes. We need to improve acceptance of payments via universal schemes. Now, the providers in Tanzania moved all the way from having a USSD code. For those who don't know USSD, it's a string you dial on your phone. For example, *150#. And once you dial that, you get a menu and you interact with that menu. They moved from that way of providing a service to QR codes, to apps, and they're still improving in that area. But the way they offer service, the user experience is much better than the way it was before. And then at the end of the day, I'll talk a little bit about oversight capabilities, which is exactly where Tanzania is in right now. We'll see that in few slides to come. Now, if you think about the design principles of interoperable platform that Tanzania today is building, the Tanzania Instant Payment System, which is facilitated by the regulator. I must commend the regulator in Tanzania. They took lead in innovation. They supported interoperability and they encouraged players to actually offer better services to the market. On the left side of this slide, we're talking about the design principles that drives the interoperable platform that Tanzania is building now. It looks at all the way from open and interoperable platform. You'd see that being the first design principle that tells you that they do care about interoperability. And then they talk about some features of the payment, push credit transfer. In other words, if you're a banker, you know, as a credit card user, you can actually process a pool transaction. But the typical features of mobile money is push. You cannot pull money from a mobile money account. You can only push. In other words, the owner of that account must decide to do the payment. And they are advocating for real-time payments, just like mobile money is. They are encouraging all use cases. And a principle like this will tell you that, yes, the regulator saw that there's some sort of interoperability on peer-to-peer transfer, but they also wanted to see that on other use cases like merchant payment, utility payment, bulk payment. They wanted to include all those. And then the irrevocability principle, and then same-day settlement. There's a lot of beautiful stuff that the regulator there is designing around settlement on their platform. They need to reduce cost on this platform. In my view, I think a few years to come, payment should be free, just like emails are free. And providers in this space need to look at alternative business models. So if I look at the case of Tanzania, the bread and butter of mobile money in terms of revenue was providing, charging for the service of sending money. But in few years, I see that service being free and the players making money on a different service. So for example, the services are coming in already. For example, the mobile money players in Tanzania today are offering services like credit, and they are offering services like loans and savings, and they're making money out of those services as well. So I see a place whereby holding accounts will be free, transacting on accounts will be free, but regulators will make money, or sorry, the providers will make money out of services surrounding that account. The price transparency is driven a lot. Payment addressing, I'll go through this quickly. Inclusivity of governance. And then the last three principles are all about regulation. So fraud utility, they need to actually make sure they take care of fraud. Connectivity to other schemes. This also talks strongly about interoperability. And finally, regulatory oversight. If you look at this right side of this slide, we're talking about the main principles of inclusive payment platform, whereby you've got collaborative sphere and you've got competition sphere. So the rails and rules are for everybody. We need to collaborate on these areas. The regulator is leading in that. While the building of accounts and apps is an area that providers will be competing on. And this is done by service providers. With this kind of setup, you're allowing the market to thrive by creating a conducive environment for providers, but you're also allowing them to compete in a way that they can offer better services to their users. This slide will tell you a little bit about the journey that Tanzania took in implementing their national payment switch, and it's divided into phases. It is very important to note that a lot of activities in this implementation were iterative work streams. In other words, the governing rules were being developed as they were going. The operating guidelines, the technical systems, and the onboarding of participants will be an ongoing process, because you're building a national payment system here. It's not a system that you'll build once and you're done. It's an ongoing process. If you look at the phases they took, on phase one, they did ecosystem mapping, whereby research and analysis was done. And then the planning and building. Sorry?
Innocent, before going to the phase by phase, I have some few questions on board. Would you like to have some discussion on those? Or
yeah, I can take those questions here.
Okay, just can you go into the question answer tab?
Okay.
So first one is from the Bangladeshi market, because this question is asked by the Tapan Chandra Roy. Sir, can you please discuss on the lack of interoperability in the MFS of BD? I think we will discuss this one with the Zulfikar Bhai. And the next one is from the Ranul Ansari. So are you getting the question?
Yes, I can hear you.
Okay. Can you see it? It's on the top side of Q&A section. There's the open questions there.
Okay. Sorry, I'm trying to. Let me end my show.
No problem. Then I'll read for you. In the it is paramount to have a low cost. However, if we make the transmission fully free, I think it will be transaction fully free, then the payment intermediaries such as the PSO, payment service operator, will be wiped out. In that case, can we adopt account information service provider or the payment initiated service provider from the pages of PSD. Okay, he's talking about the regulation of PSD2, which is mainly implemented in the England. So there's some two different type of services. So one is the account informatory services, and there is some payment part. If his question is Mr. Ridwan question is like if the transaction is fully free, then the middle, the intermediary or the aggregator, how they're gonna do the business, as there will be no transaction fee?
Yeah, good question. So basically, I think this is where I spoke about the business models. When mobile money started, the agents made a lot of money because they were at the point of exchanging cash into electronic value. In other words, if you want to send money, you would go to an agent, give your cash, they'll give you electronic money. You'll send that money to the receiver, who would go to an agent and cash it out. With that particular use case, the agents were key to offering this particular service. But as the operators bring more services, so for example, you have a lot of points whereby somebody can pay with mobile money. You realize there's less and less need to cash out your money. And the business model there shifts to people who are selling products and goods. And obviously, the agents would have lost some sort of business. What then it calls for is a change of business model. What else can an agent offer to still be able to make money? What else can a service provider offer to still make money? Now, I strongly believe that with all this shift, the providers will have different business models to support their business cases. I don't know if I did answer your question.
Udon Bhai, is it, I think, are you with us? Udon Bhai from the Circle Fintech? Okay. Okay, there is another question. Yeah, it's fine. There is another question. How is Tanzania tracking the mobile money fraud? It's mainly that it will be the tracking of the mobile money fraud.
So
is there
mobile money? Yeah, mobile money fraud mobile money fraud is being taken care of at different layers. The providers themselves have got the revenue assurance and fraud departments that actually looks at this particular frauds. If you look at the frauds, so I would say that frauds are divided into three categories. One is a customer defrauding another customer. The other one is a customer probably defrauding the providers, or scams whereby you're being tricked to send money to someone else while you're not supposed to send that money. So in other words, when fraud involves a user and a user, the providers address that through communication. So once you've realized a type of fraud happening in the market and that affecting your customer, they actually went out and communicate to all customers and say, this is how you need to avoid that kind of fraud. On the other side, the providers really suffered when it comes to transaction commission frauds. This is whereby the agent tricked the system by doing multiple deposits, multiple withdrawals to make more commission. And you would see that as time evolved, the providers were very smart by putting measures around monitoring multiple deposits or direct deposits and actually block those agents out of the system. Now, from a provider point of view, they are doing all they can to take care of, to avoid the fraud in their system, but also make sure that they don't lose revenue based on fraud. But on a regulator point of view, if a customer is being defrauded, at the end of the day, this customer will come to the provider. If the provider does not solve that case, they will end up to the regulator. So the way the regulator is looking at it with the current system, they have a need of making sure that they build a fraud utility. In other words, every transaction happening within the economy, they've got a view of it. And by the time the customer go to them and say, hey, I've been defrauded, they don't depend on a provider to give them information, but they have first-hand information. And they can actually stop that fraud proactively instead of reactively.
Okay, that's pretty much clear. So I would like to request you continue the phase-wise deployment of the interoperability phase that you are discussing about. Then there are some questions that we will discuss later on, later of the open discussion after the presentation.
Perfect. I'll make sure I keep it to a place I can find it. Cool. So we then spoke about the evolution of, the way Tanzania built their national payment switch, and I said it is an iterative process, and it was divided into phases. Phase one, I've spoken about. On phase two, it was about planning and building. This is whereby they built a payment system principles, talking about what do we really need. We've spoken about the 13 principles. Then they developed a business case to say, if we have a national utility, does this make sense to the regulator to run or support? Does it make business sense to the providers? On the other side, they looked at after they confirmed the business case, they started doing program design and started building the platform. And on phase three, which they are still working on, is implementation and operation, of which they'll start onboarding service providers, which is banks, mobile money providers, and MFIs, and they will start running the switch itself. So there are many design decisions that can be made in this process, but the most important thing is the fact that the regulator included the industry players. They actually discussed with the industry players before they made these particular decisions. If I look at the industry engagement, I would really talk about the Tanzania regulators' approach of test and learn, which, in my opinion, was a pillar to the success they have in Tanzania today. Instead of bringing the providers down by saying we don't have the regulation, we need to make sure that you operate within the guidelines, they operated on open doors and they listened to the players, and then they allowed them to operate as they are doing oversight. As time went on, they built in regulations, and now they're building a national utility that will support all the payment providers in the market. This, in my opinion, is the foundation of success in Tanzania market.
Innocent, just for my clarification and for the other attendants, this test and learn approach is it falls under the some sort of regulatory sandbox?
Yeah. Well, when the rest of the world is talking about regulatory sandbox, which purely is the same principles, Tanzania's had this approach. They did not have, so when you talk about a sandbox, someone can talk about systems in place that allows people to connect, fintechs to come in and try their products and services. In the Tanzania case, they did not have this formal kind of sandbox environment whereby people would come in and test stuff, but the regulator had open doors policy whereby they listened to providers, they had the discussion with them to understand what they want to offer, what benefit it brings to people, how does it drive financial inclusion, and then they agreed with them that, okay, we allow you on the basis of this particular services you're going to offer, and this is how you're going to protect the user against the loss of money. In that approach, I would relate it to sandbox, but the concept of sandbox actually came later, but Tanzania is not having an official sandbox, so to say.
Thanks.
Cool. Now, if I look at the payment systems that the regulator is running, now for the bankers, you understand TIS, you understand touch, and instant payments. Now, traditionally, the bank regulated all the banks, the licensed financial institutions like commercial banks and the like. And these commercial entities did run on RTGS, check, and EFT. On the other side, we had in instant payment, we had a national card payment network. And the regulator saw that there's lack of connectivity with the rest of the payment systems in the market. The mobile money guys are doing something different. The MFIs are serving some customers, but they're not falling in any of the categories within the traditional systems. Then the regulator introduced Tanzania Instant Payment System, which will bring all the instant payment systems, including mobile money, MFIs, and other payment service providers like the aggregators we've spoken about earlier. This is when they came up with a picture of how do we bring the payment ecosystem in Tanzania together. I will show you that view in the next slide. But one of the several payment systems that coexisted without being part of the payment system is the wallet provision that is being offered by non-licensed financial service providers, the likes of MNOs and MFIs. If I go to the next page, for anybody who is looking at this page, it's super confusing, but it gives you the picture of what the instant payment system does in the country. Now, on the top of this picture, we talk about consumers, SMEs, merchants, billers or enterprises, governments, agents, and aggregators. These are the major players who have made mobile money successful, or any real-time payment system successful in Tanzania. And all these are players within the current system that Tanzania is building. Under that, we talk about the digital financial service providers, the digital financial service providers who are e-money issuers, and you've got the bank providers. And then on the far right, I've got the third parties processors and non-digital financial services providers. These are the entities that provide these payment wallets or the payment instruments. And below it, you've got the Tanzania regulator, BOT, who are bringing interoperability among all these providers within a same view. So in other words, they're building directory, they're putting together a switch, settlement calculation, the database of fraud utility, we spoke about fraud earlier. And all these systems are operating under the scheme rules. Then they're putting together the digital finance advisory board or group. And then they're talking about the third party advisory group. In other words, as you operate the scheme, you've got the rules, but you've got boards or bodies that would be able to discuss these rules and make sure that the national system actually works, not for anybody else, but for all of them. And around the national switch, you've got other systems that are complementary to the national switch, which is stuff like the national identity database, financial services registry, and the Tanzania settlement account. Now, as you look at this picture and contemplate on it, I will share with the organizers this presentation so that everybody can have it. I don't want to belabor too much on this particular presentation.
Definitely, that will be very much helpful for us as well as the people who is attending here and in this session. So it will be very helpful for us if you share this presentation to this attendance. It will be very helpful. Thank you.
Sure, I'll do that. Now, This implementation of Tanzania instant payment system was facilitated by a number of players. Now, we can't say this without mentioning the Central Bank of Tanzania, who was the lead and the brain behind bringing the industry together. On the far right, we had development partners, financial sector deepening trust, the Rockefeller Philanthropy Advisors, who supported the funding of initial work and the current work, and then Bill and Melinda Gates Foundation, who are advocating the level 1 principles, financial inclusion, and were the major funders of the project. On the other side, we've got the technology and advisory team, ModusBox being part of the technical advisory group, and Glenbrook Partners doing the business rules and supporting them to think about the business model. And all this would not happen if the industry players were not there. Now, in Tanzania, I would break them down into a number of groups, but you've got the mobile money providers, Vodacom, Halotel, Airtel, Tigo, and the rest. And then you've got the banking group, NMB, CRDB, and the like. And then you've got the association, TBA, Tanzania Bankers Association. This is an association that brought the agendas of bankers together. It was very important to include this group because they spoke about the interests of the bankers. And on the other side, we had the Mobile Money Operators Association that made this particular service possible. If I move to a bit of reflection, I would like you to take home the fact that technology and business models would constantly change. When mobile money was launched in Tanzania back in 2007, 2008, it was all about closed loop systems. You are a Vodacom customer, you get an M-Pesa account, and you can send money to a Vodacom customer to go into their wallet, or you can send money to another network, but it will go out as a voucher. The technology allowed for that closed loop system. But as time went on, they started opening up. The technology came in, and today we're talking about real-time payment system that would enable movement of money from one provider to another provider instantly. With that happening, business models has to change, because when money was initiated and terminated within your network, now it's going to another network or to another a different service. The business models for that change. When a mobile money provider integrates with an insurance company, the business model there is totally different from sending money. So take home the point that as the services evolve in the market, technology changes and business models for providers would actually change. Different players will come into the market. Partnership and collaboration is key. You cannot have a service provider providing everything. So as a bank is offering account services, savings, credit, payment, you've got an insurance company that actually insures users, and they need a payment platform to be able to facilitate that. We don't expect bankers or wallet providers to offer insurance, to offer other services around their wallet. So collaboration is critical. The regulatory environment, in my opinion, was the key success in the Tanzania story. The fact that the regulator was open and collaborative with the industry allowed that open-mindedness to their operation model, basically drove the innovation and success we see today in Tanzania. And then we cannot forget about the influence of development partners, the fact that they came in and interjected or supported activities that drove success that is there today, and they did not disrupt the market. To me, I see that as critical. On the other hand, innovation-friendly environment, as the rest of the world is talking about sandboxes, Tanzania or East Africa in general was talking about letters of no objections. Public utility. We've spoken about R2 and A2. If you remember the rules and the rules and regulations versus accounts and app. Basically building a service that would allow everybody to have a level playing field and allowing providers to compete on specific areas. At the end of the day, it's all about inclusive mindset. A platform that benefits all would actually be successful in the market. With that, I would like to say thank you. And if there are any questions, I'll take them.
Thank you, Innocent. It was a nice and a very informative one. There are lots of things that we can take it as an insight from the outside the market, and we try to implement with the proper regulatory guidance in our country. So, with that note, I would like to request the attendance. If you have any questions, you can ask. We'll share the presentation after this webinar later on. So if you have any question that you need to discuss or you need to know more about the expert from the Tanzania, you can ask right now, or anything that come up your mind later on, you can mail it to me so that I can get it back from the Innocent Steven or the any guy from the Metaspoke. And Zulfikar bhai, are you there?
Yes, I'm here. Yeah.
Okay, Zulfikar bhai, there is one question was pending is somewhere on the Bangladeshi market. So the question is asked by the Topon Chandra Roy. Can you please discuss on the lack of interoperability in the MFS of PD? So
Sure. I can always. I have seen that questions in the question and answer, box, like lack of interoperability in financial services market in Bangladesh. That is being, well addressed. You see, I said that we started with number of banks, number of licenses. I would say that we probably did not allow all the market player to have a kind of equal uh, 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 equal environment to really grow, and that's how many of them could not really have a entry in the market. And those who all are having entry in the market, like 16 providers, many of them are really struggling with their survival. So out of these 2-3 players that are controlling around 98, 97 to 98% of the market stakes, you understand that if we cannot just install the interoperability right at this moment, probably all other who all are struggling will also be shredded off, and then only we'll have 2 of the operators here. So what happens? Actually, once the number of operators are less, then there will be less of competition. We started giving 20 taka back in 2012. We're still giving 20 taka per thousand to be sent. So I can vehemently say that if there would have been more number of the players, if there would have been a real competitive environment, I think this 20 taka could have been 15 or even less than that. I'm sure that would facilitate the low income people who all are sending, maybe earning rickshaw puller earning 500 taka, sending back to his family maybe 500 taka or 1000 taka, and spending maybe 20 taka instead of 10 taka or 12 taka. So that is one of the burning example that lack of interoperability is really giving a true struggle for the market players as well as the subscribers. Let me share you one story in a very short. That is back in 2015. It was a kind of symposium or panel discussion organized by Policy Research Institute, I mean PRI, on this digital financial service. So you understand the level of participants were there from each organizations. We had top brasses participating in the discussion. So in reply to a question on interoperability, one of the market, one of the representative of the market leader said, yes, we have interoperability in our market. So he said that you can go to any agent, and if you ask, I want to send money to Rocket, he will be able to send you money to Rocket. If you want to send money to Bikash, the agent will be able to send money to Bikash. So this was the understanding by a representative, I mean top brass representative of a mobile financial service provider, that this is what interoperability, probably we will never have interoperability in Bangladeshi market, and probably we have to just come out of this kind of understanding. We have to really think. I'm sure in the discussion today, most of the participants are with the financial background, I mean the finance background, and doing a lot of research and development or discussions, or participating in this kind of discussion. So you should promote, you should try to say, and you have by now already seen the ample of the benefits that has been delivered by the Tanzanian Bank of Tanzania, I mean board, I mean the authority put into regulations, and then thereby with the collaborative approach by everyone. So the Tanzania market is how it is flourishing, how people are being benefited, how financial inclusion is taking place in an exponential growth. So lack of interoperability and having interoperability, by now I'm sure that you have a clear idea. Thank you very much. Naseem, could I
Thank you,
answer this?
Zulfikar bhai.
Oh, okay.
Yeah, so that was nicely answered. So there's one question. It's for the Innocent. Innocent, are you there? So
Yes,
there's one question. It's mainly they want to know what sort of strategy they use to acquire the customer acquisition regarding or to promote this interoperability space. Is there any sort of specific customer strategy on the interoperability space?
So yeah, I think when we talk about customer acquisition, it happens from the operator's point of view. Now, in the beginning, there's a lot of land grabbing and wanting to dominate the market. So telecom operators are very good at distributing services. So they would actually do stuff like on-the-ground activation and education. When it comes to money, people need to know more. So basically on customer acquisition, from the operator's point of view, they did a lot of education, a lot of marketing, a lot of training. When it came to interoperability, I think after different providers were available offering different services for the same markets, the same market to the same users, there was a need for, mostly there was a need for services to interoperate. So when one provider said, today now you can send money to a user of another operators, ideally, we saw in Tanzania, the growth of interoperable transaction was faster than the growth of peer-to-peer transfer when mobile money was launched in the beginning. I wish I could show you those trends on this particular presentation. But in Tanzania case, when it comes to interoperability, the marketing was jointly done by telco providers to say, now you can send money, one nation. Actually, the marketing message was one nation, allowing users to send money to any user who is in the country. And that marketing message drove a lot of awareness, hence a lot of uptake of the service. So when it comes to financial services, I would actually advise on a lot of face-to-face education, a lot of communication and hand-holding for people who are not used to using these services. Remember, most of the mobile money users, they've got limited amount of cash. They don't want to play around with it. So they would use the service if they really are sure that the service will deliver to their expectation.
Okay, the slogan was very much touchy and the emotional. Is the one nation, so there is no binding, no regulation. So automatically, so it's you can send money anywhere to any operator. That's the nice strategy, I would say. So I have one question just for my clarification to Innocent. So in your presentation, you have said that going forward that there in near future you see, and we also presume that there will be no transactional fee. Rather than the provider will earn from different type of products such as the nano lending or deposit sort of thing. The first question is that whether you, as per your regulation, your MFS provider in Tanzania is allowed to offer such type of product. If yes, then it's fine. Or if no, is there any joint collaborative partnership with the bank or any other institute? And that's the second one. And
definitely
in that scenario,
yep,
so in that scenario, when there will be no transaction fee, how those intermediate layer will survive? So whether it's only from those type of product or the innovation or the service they are offering to the customer, or something else is in the business, and the business model is there.
Yeah, sure. So yes, I do believe that payment would be free in the future. And the Tanzania regulator, in one of their principles, they're talking about ultra low cost. They're not yet talking about free, but they're talking about ultra low cost. We see collaborations in the market that would help different players to focus on their business model and probably get the wallet owners to change their business models. Now, the question is where would the wallet owners start making money from? I think data. I think the fact that they know a lot about the user would allow them to make better decisions on lending, would allow them to make better decisions in insurance premiums and stuff like that. Now, think about it for a second. A mobile money provider is the same person who is offering your telco services. So basically, the telecom providers know what you're browsing. They know where you are. They know what you do with your phone. They know how you pay. They know how you recharge your account. They know to which kind of bank are you integrating with. They know how you drive. They know how long you sleep. So in other words, the data that they get out of all the services they offer you, plus the mobile money or the payments data, will allow them to give you better service as they apply consumer protection on your data. So I'm not saying take that data and share it to somebody else, but use that data with the user's consent to give the user a better service. So if you think about the data I've just spoken about right now, as an insurance company, I can make a better decision on what kind of premium and how much I insure you. As a lending organization, as a bank, if I partner with a telco company, I can make a better decision on who to lend money to. A typical example of these services evolving in both Kenya and Tanzania is M-Shwari in Kenya, which is a lending product between Safaricom and CBA. And the same CBA is offering an Empower product, which is a lending product in Tanzania. Basically, these products are only offered to users of M-Pesa. The decision of lending is made out of data that comes out of the mobile money transaction and the telco data that you have as a user. So the collaboration is key to this. Now you've asked, are these providers allowed to do lending? The answer to that is MNOs are not allowed to do lending directly. They have to collaborate with a licensed financial providers, or they need to get their own license to do that particular service.
Oh, that's the pretty much discussion. That's I think that in that direction it was heading. So going forward today, tomorrow, they will have some sort of this alternative scoring and the something like that. With the collaborative partnership, on any insurance organization, any bank or financial organization, with MNO and .FIs that you can innovate and offer different sort of product from your platform. So from there,
That's
that
correct.
you will earn money in the long run. Yeah,
Yes.
that's the interesting one. And there is a last question I would say. Julfikar bhai, if you're there, I think it will be more appropriate to you both. So one of the example that we have seen from this Tanzania market, that there are lots of collaborative partnership and the bilateral arrangement and the agreement with different type of providers and the regulators. So the question was for the Ridwanul Ansari, what is the barrier of Bangladesh regulator like Bangladesh Bank, Bangladesh Post Office and the BTRC to go into similar type of arrangement? So that's the fantastic questions I would say. So if if there is a such type of synergy and the arrangement with all the operator, or sorry, all the regulator, then it will automatically open the new dimension for the digital ecosystem on the space on the interoperability. Can you say something on it?
Sure. That's a very nice question. Nice question. Rather, I should say it's a nice topic to discuss, really. So the Nagod, as a mobile financial services provider, you can see they are working on a different act or different regulations. The regulations comes from the Post and Telecommunication regulations. So they have a different, market behavior. In the authorization of money they should handle in a single transaction or something like that. Uh, Other than the regulatory, I mean the usual mobile financial services provider like Bikash or the Dutch Bangla Bank, who all are actually operating with the mobile financial services guidelines, published by or the convened by the central bank. So you see, of course, Mr. Innocent has given a lot many examples how the collaboration actually took place between the regulators, between the market players, between the technology provider, even amongst from the subscribers side. So definitely we need a collaborative approach to have interoperability to be deployed successfully in a governing market like Bangladesh, where already we have millions of the account holder, but then they are only can do the transactions in their own network. They are unable to do the accounts, like even Nagod is moving towards a direction, Bikash is moving towards another direction, Rocket is going towards another directions. So there is no collaboration. So I would suggest that it's a very valid point that we should, nevertheless, that we are late. Rather, we should say that we should start discussion. We should have a collaborative approach between the regulators, between the providers, everyone, to come forward and to say, okay, no, let us follow some good example. We have done enough. We had been moving towards different directions independently. Let us move towards single directions for a greater financial inclusion, for greater promotion of the industry. Let us have a single regulations. Let us have single platform to work, is something like that. I'm not sure that I could answer your question in the right manner or not, but that's what I can say for the moment, Mr. Nasir.
Okay, with that note, I would like to conclude to this webinar. It was really great interactive session. We, as a panelist and all the attendants, there are lots of questions in the tab and the question answer box. So I would like to thank from the core of my heart, Mr. Zulfikar and the Innocent from the Tanzania and the Steven. So make it happen that the Modus Box representative was present here to share some insight with us how as a country Bangladesh we can move toward the interoperability. Thank you all. Thank you very so much. I will share the content with you all as soon as I received from the Innocent and Mr. Julfikar. Thank you all.
Thank you very much.
Yeah, thank you very
It
much.
was nice.
Bye bye. Have a good night.
Bye.